So the bottom line, we know where they're going. We know where they have to go, right? We're all smart enough to know that. And what are the plays on this? And a lot of people say, well, gold could be the play on this. And you do a lot of research on gold, and I just don't get it. I really don't. I mean, you could say, well, it's a safe haven, and you invest for safe haven, you invest in a store of value, you invest in so many different things. And has it really been that much of a safe haven through this? It's down a little bit, less than the markets, but not really. I don't feel comfortable. I feel comfortable in cash, right? I mean, so gold is down. But yeah, I'm looking more and more at gold and starting to realize something that I don't know why anyone should own gold. I have a lot of friends that listen to this podcast in Vancouver, and they're going to be sending me emails for saying that. But this is about you. This isn't about my friends. This isn't about anything. This is about your investments. And what I see with gold coming down the pipeline, I mean, if you believe that, look, dollar's going to be strong, it doesn't make the gold as good investment. But if you look at the data, I don't know, maybe it's you. I mean, you can find a reason to buy gold. I mean, I could break it down for you why you shouldn't. But, I know being gold is a safe haven or gold right now, where there's all this confusion, I think you're crazy to own gold right now.
Well, I am crazy, so that's easy.
There you go.
Yeah, well, that's no doubt.
And by the way, we have gold in our portfolio that's doing okay because we got in early, right? There's one stock that we recommended that almost stopped out because...
Yeah, I was going to have fun with you on that. And it's not like you don't have any exposure to gold.
I have a lot of exposure to gold,
exactly.
But you know what? I'm going to start reducing my exposure to gold.
Well, we gotta keep the people on a stiff arm that are going to accuse us of double talk here, because I like this debate, because I will concede right off the bat that the only reason... I'll give you the underperformance depending on what we're comparing it to. However, I have way too much of an old soul to disregard gold. And I just still believe that the world is big enough for both. When I say both, I mean Bitcoin, because it's obviously stealing thunder and a lot of capital from gold. I will back it up from a older man's perspective here, Frank, on manipulation and things. However, our Newmont mining pick, which was in October of 2018, if memory serves me correct, is up about 180% since then. Mm-hmm. Okay, which is great. It's a great producer. It's a very great management team. Mostly friendly jurisdictions. It's going to produce millions of ounces for years to come, pay a dividend and all that. So I would push back on that. Yes, we got it at a good price. However, I'm sure you have some charts and things over there, but I would argue this time is different for a couple of reasons. We can get into that in a minute. However, you don't erase the purchasing power or the holding of value in gold. Yes, it fluctuates, but when something has the longest history of finance that we have, I'm not ready to do away with that. I understand there's better times to own it or not, but I'm still okay with having exposure to that because of the results like Newmont mining.
And times change. I know a lot of you, listen, we have to discuss this because it's important to deal with. There's a difference between gold. Well, you look at Newmont mining, right? So the junior miners are at the most risk here. But and again, we do own some that are really, really good, but we might have to reduce exposure, just doing the research on this. But there's a difference between gold and gold stocks, because Newmont Mining produces gold. They could produce gold for $900 an ounce. We know what gold prices are: $1,800, $1,900, even to go to $1,500. Right. They're printing money. They have dividends. I mean, what happened to them in 2012, 13, 14 is the best thing. They almost all went bankrupt because it was so aggressive. They shrunk their balance sheets. They tightened everything up. Now, their profit margins are the greatest they've ever been, right? So it's still a good place. Some of these large cap producers on a fundamental level, right? But we're looking at gold itself is why would you hold gold? Physical gold. And you could say, well, it's a great play, during tough times, which it's not really. I mean, I think cash is much, much better. I mean, why don't you put it in treasuries right now, right? So, you're seeing the rates go up, and rates are a big deal when it comes to gold. Okay, because if you're looking at gold and holding it as a store of value, you have to be careful here, because it's tied to real interest rates. Okay, and what's real interest rates? It accounts for inflation. So what do we have all this time, pretty much since 2010, 11, 12, and onwards? We had the Fed lower rates considerably, right? Inflation was held in check, but we saw it, go to 2%, 1.5%, 2%. When interest rates are zero, meaning there's a negative real interest rate. So people want to hold gold when it's, the interest rate is zero. Otherwise, treasuries make a much better investment because, again, you're parking your money and you want to earn something on it, right? So let's talk about that for a minute, because the real interest rate argument, it didn't really work too well for gold, but it did work in certain times. In 2012, real interest rates were at their lowest point in 20 years, right? So if negative real interest rate was below, it was negative 1%. And gold spiked to all-time highs, which makes sense, to around 1900. In 2020, real interest rates fell below 1% again. gold hit new highs, right? Close to 2000, almost the same level as 19 and change. We're not going to have that anymore, Daniel. We're not going to have negative real interest rates anytime soon. I mean, inflation is through the roof and the Fed is raising rates. It's almost an impossible environment to have negative real interest rates. So how could you hold gold as a store of value when you could hold treasuries, which makes much better sense here? Now rates are going higher. And people think inflation is going to moderate, but the real interest rate is spiking. It's actually spiking. And the last time we saw it spike, every time we saw a spike like this, real interest rate, like in 2013, early 2018, gold crashed to under $1,200 an ounce. That's where we're going right now. So real interest rates are going to surge, right? As inflation's high, the 10-year surge, interest rates surge. Where do you think gold is going to go if you're holding it as a store of value? I mean, look, the data is there. It shows you when the best time to buy gold is when you have that extreme negative real interest rate. We're not going to have that. But let's say this, Daniel. Let's say if we do have that. Let's say if inflation goes back 2% and the Fed just says, you know what, we're going back to zero interest rates. Do you really want to own gold? Because the last 10 years, what do we see in that conditions? That the equity market was the greatest investment ever, and gold and growth stocks took off tremendously, right? So the rate that you're praying for gold, which is negative interest rates, right, to really collapse, and that only happens if we have low inflation and low interest rates. Why would you rather own gold? Because even though gold spiked to those levels, equity significantly outperformed. So when I'm looking at gold as an alternative with all of this going on, and people say they want to own gold, when you're looking at gold, physical, it's difficult for me to make the case. Now, that's what gold. I mean, I don't know. You're right. We do own Newmont, but, on a fundamental level, these guys are producing gold at a low price and selling for a much higher price. It makes sense. I'm talking about the gold price. But as gold prices come down, a lot of these stocks are going to get hit because their margins are going to shrink, right? But I'm trying to find the case. And anyone out there, tell me what the case is, because it's the same case since 1970, right? You're going to go to Peter Schiff or whatever, they're going to argue the same reason gold in the 70s. The thing they don't understand, and you said you're not ready to give up on it, you have to be ready to give up on stuff when there's new alternatives, right? And you're looking at Bitcoin as an alternative here. And I know that sounds crazy because people like Bitcoin and gold, but for me, and I'll show you it. To me, Bitcoin is a much more logical answer here than gold if you're looking as a store of value.
I like that, and I agree with all of that. I would push back on this, and this is a short time frame, but year to date, the price of gold is actually up a little bit from about 1,800. It spiked to 19, but comparing that store of value and such, the market's down 10 to 20% depending on which indice you want to look at. So being flat year to date on the price of gold is pretty good. The other thing I'll say is that this proves that money and investing is emotional with greed and fear. Yes, you could say gold has been outperformed by a lot of things. I was actually just having a conversation with a very close person of mine the other day, and I said, hey, I don't think you're crazy if you own gold coins and hold gold. Just understand your expectations and why you're holding it. I'm not saying go all Scrooge McDuck and have so much, because you got to have an exit plan. Are you going to sell these back for dollars later? Why are you owning this? From that perspective, though, I do think it's going to continue to hold its purchasing power. And this is where I'm going to get a little crazy here real quick for you, Frank. Mm-hmm. There is no way in the world that the price of gold is not being massively manipulated lower. And that's okay. That's the environment. I don't expect that to change. However, a quick search through any search engine, Frank, you can pull up that JP Morgan Chase already paid over $1 billion for manipulation prices in precious metals and futures. You can pull up searches where it has Barclays slapped with $44 million. This is from 2014. Deutsche Bank paid over $130 million to settle charges in 2021. I mentioned the $920 to $1 billion from JP Morgan Chase. Now, I'm not saying going full tinfoil hat here, but I don't think it's a big stretch to think that if you had a little bit of clarity and or collapsing in markets, which when shit hits the fan, yep. Mortgages, gold, commodities, treasuries, whatever, when you have this washout period, I think when it reprices, that's a potential. However, I totally concede what you just said. I'm just not ready. I think there's better times than now, and I agree with your interest rate argument. And I know you're not saying to sell all gold, but I'm still okay with having a little bit into physical gold as an oh shit moment. But I admit, it's purely emotional, but that's the way it is.
If you're a data and numbers guy, it makes sense. And look, I still have gold investments. I have lots of gold investments, and we have a couple of picks in a portfolio. But when I'm looking at gold right now, where I'm seeing the real interest rate actually just spike the last couple times, it did this. Gold fell to 1,200, right? So let's see if it happens. Okay, right. It doesn't mean it's going to happen, but the reasons for people to tell me to own gold, just like you said, well, year to date, it's up about 1%, tiny bit over 1%, right? So for me, I'd rather own cash. It's more liquid, So, I could see if it was up 10%, that's pretty cool.
Mm-hmm.
But if you're at 1%, what's the difference in cash when I'm much more liquid and get in and out wherever I want and do whatever, So when I look at it from that perspective, it's not enticing enough for me to say, okay, yeah, you're right. Gold, definitely. It's just, for me, it seems like gold is more comparable to cash. And a lot of times cash is better. And yes, you account for inflation. And people are going to say, well, your purchasing power is lowered and stuff like that. And I get it with gold. But still, we don't know where gold's going right now. But I don't know if I really want to own gold if the market continues like this. I really don't know if I want to continue to own gold. But, getting back to Bitcoin, guys, look. Bitcoin's been all over the place. It's down off 60,000. It's still, it's rallying today. It's actually one of the assets that oil's up today, but you're seeing Bitcoin up nicely, up like 3%. If you guys get a chance, you can look at the Wall Street Journal and just type in, crypto and Wall Street. And these are articles that have come out, Daniel, just over the past week and a half. All of these major banks are getting into crypto. And they're saying it. And there's if you're looking at the titles of Wall Street Journal articles, and if you're looking at our YouTube page, I could probably bring them up. Let me see. So one of them says, and I'm going to bring this up right here. So this is from Bloomberg first. Wall Street firms make crypto push to catch up with cool kids. Again, this is a couple weeks ago. Cool. And it just shows Jefferies expand services, BlackRock, back to stablecoin. But these guys, BlackRock's trillions of assets we're talking about. I mean, these are the biggest companies in the world, right? And when you look at, and I'll bring that up right here for the Bloomberg article, for those of you watching on our YouTube Curzio Research channel. And, when I bring up like a lot of stuff like this, when you're seeing even with Wall Street, and here it is. Okay, cool. And this is from May 1st, and it's a very big article, right? It's like, so it's Wall Street reluctantly embraces crypto, and it's a long, detailed article, but it goes through, all of these firms that are now jumping into crypto, and it's pretty crazy when you look at the trillions in assets just now jumping into crypto. So you just Jefferies, BlackRock, Goldman Sachs, right? Then you have Fidelity and Cowen. So Fidelity Investments, they just started announced to allow individual savers to add Bitcoin to their 401ks. I mean, you're looking at Bitcoin, right? It has a fixed amount here. It's digital. It's new age, right? So it's you could use it as a currency. You could pay for cars. You could pay for a lot of things through Bitcoin right now. You really can. All these banks are attached. So you have BNY Mellon, State Street. This is what the article said. So they're all saying, listen, they want it because their clients want it. And yes, that's true. But these guys have to get in here. They have to do this because Bitcoin and crypto, it's threatening their extremely super high margin models, which is, charging massive fees for being middlemen. And that's what, Bitcoin and crypto is doing. So now they're going all in. Guys, they have 50 trillion in assets under management. Right? This is $250 trillion under management. That's total global assets under management, right? And most of that's not in crypto at all, Daniel, right? So now that you open up the doors and you're providing regulation behind this, which, the Biden administration said that they're going to do, for me, I'm hearing from institutions, now they know they can put money into this, and there's no coincidence, like over the past couple of weeks, all this is coming out. This is a massive amount of money that's going to go in Bitcoin. And guys, for anyone out there, listen, it's been tough. And even in our portfolio, we have our average position down probably about 25%, and that's the positions over the last 6 months. Okay, this is the same percentage we saw when we first started this portfolio. We're down 35 and 40%, and these are names that are up 20x, 15x, 10x, which you'll see in our crypto intelligence portfolio. My point is, right now, when it comes to crypto, you got to be careful because 90% of the shit is garbage, but there's a lot of great things and innovations coming out of here. But man, it's just, if you're looking at a place to put your money during these uncertain times, you're going to see a lot of people start going into Bitcoin. And the fact that there's a fixed supply of this, and if you compare it to gold, Daniel, which is, to me, it's a baby boomer asset. Okay, this is an asset that, the older generation knew about, retirees now knew about, and a lot of people are still sold on it. But you have to look at the younger generation, Gen X, millennials. This is a digital generation. They know nothing about gold. They have no idea. They have no idea how it's mined. And it takes, 15 years to produce gold from the start. They have no idea, right? So when they look at safe haven, store of value, and say this group over the next 10 to 30 years, we'll go that far out, they're not going to turn to gold, right? They're going to turn to Bitcoin. So to me, Bitcoin is a secular growing market, while gold, in terms of its investor pool, is a slowly secular declining industry, or arguably a cyclical industry, right? So you could still say, well, it's cyclical, but cyclical, it's supposed to do, really well, but negative real interest rates, we're not going to see negative real interest rates for a very, very long time, because that means inflation is not only moderated, but it's down considerably, and the Fed isn't going to, the rates have come down. So, for me, when I'm looking at this under these conditions, the perfect conditions for gold, I'd rather own equities. And the perfect condition or the conditions that we're seeing now, I will look as Bitcoin as the place to be. And all the money coming into it now, because it has very little institutional flow right now. Now you're going to see institutional money flow into this tremendously, especially over the next 6 months, a year. The biggest hires that they have in banks over the past, I've been talking about this, the past 9 months, 12 months have been in digital, in crypto. So they're hiring people like crazy. And now you're seeing it. They're all getting into this. And these guys all have trillions of assets. It's not going to be the whole entire asset base. But if you just get 1%, 2%, 3%, that's a significantly lower value, allocation compared to what's going into technology, what's going into healthcare, what's going into these sectors. This is going to be a certain sector and a certain allocation where we say, hey, the 12 sectors or whatever, it's 12, 13 sectors of the S&P 500. There's going to be a crypto sector pretty soon. And I have no doubt about that. But right now, if you're looking for crypto, you're looking for a place to put your money, the innovation is coming from. For me, it's a great, great time, because it reminds me when we first started this newsletter, and this is like 2018, the market came down and a lot of this stuff was so volatile. But man, with the money coming in, it's going to go into the great projects. That's what you're seeing even through metaverse and stuff like that, and even security tokens and NFTs and stuff, raising billions of dollars over the past 4 or 5 months, even in this market. But that's where I see it going. But again, that's my opinion. I look at the numbers, I look at the data. And the data is telling me that, listen, gold, if you're going to buy it here, be very careful, because it looks like prices are going to come down a lot as the Fed's tightening and inflation is not going to moderate anytime soon.